Welcome to the Liquidity Detective. This video is for educational purposes only and does not constitute financial advice. Past performance is not indicative of future results. All trades shown are real, but your results may differ. Now let's look at a trade where not buying the bounce was the whole edge. This stock had been falling for months. Then one morning it did something that looked exactly like a bottom. Everyone else was buying it. I didn't. A day later, I was out of the trade, up just over 5%. Here's how it ends. The interesting part is why I refused to buy the first bounce. One price level had my full attention, a level where a previous low had already been swept once before. If nothing unusual happened there, I wasn't interested, but if buyers reacted the way I hoped, I'd finally have a trade. Mid-morning, price dropped straight into that area hard and fast. When it hit the zone, volume exploded. At that moment I had the first piece of evidence I'd been waiting for, and I still didn't buy. Inside that same hour, price reversed and closed back near the top of the range. Over the next couple of hours, price pulled back toward that same level again. This is the part that separates a real reversal from a quick fake out. If the level was going to fail, this was where it would happen. It didn't break. Price held just above where the sell-off had bottomed. That was the proof I'd been waiting for. Most traders had already made their decision an hour earlier. Mine came after the market answered a question first. As price moved off that retest, I entered 72.84. Not on the first bounce, not on hope, on confirmation that sharp sell-off, followed by a level that held under pressure a second time. The next day, the stock ripped higher, a fast, explosive move. I closed the full position at 76.57, just over 5%, in about a day. I didn't hold for more. There was a level overhead I was watching, and price hadn't reached it yet. I wasn't going to find out the hard way whether it would hold. 2 days later, price kept climbing and ran straight into that overhead level, almost to the exact price. Then it reversed. I wasn't in the trade anymore, and that's fine. A good trade isn't measured by how much of the move you capture. It's measured by whether your reason for entering and exiting actually played out. As of today, price has pulled back sharply from that same overhead level, down almost 4% on the day. The level held twice now, once as support on the way up, once as resistance on the way back down. Same reaction, different explanation. If you want to see more real trades broken down like this, including the ones that don't work out, subscribe. Every video is a real trade, real numbers, real charts. No predictions, no hindsight, just liquidity. I'll see you in the next one.